Welcome to another interesting video with fun and unknown facts. Hope you will enjoy the video. Let's get started. Please do subscribe for more videos.
People do not know the difference between a full-service broker and a discount broker, and due to this reason, they end up paying heavy charges just to open their trading and demat account. One must analyze what is the purpose, and how that purpose can be served by the broker at least cost. To do this, one can do the comparative analysis of all the brokers and the type of service they offer, then they can decide what is best for them. People who follow the news end up wiping their entire account. News reaches extremely late to the retail investors and traders. There is heavy manipulation in the stock market which is done by the big players, and it becomes extremely difficult for ordinary traders to make money out of the news. People want to earn money without learning or reading premium content in magazines and newspapers. Big players consume premium's contents a lot to stay ahead and updated with the market. And this helps them get the idea before others in the market. Stop loss is mandatory for all types of traders, but ordinary traders fail to use stop loss for the day trade because they think they can recover the loss which goes against their trade. Ordinary traders end up losing a heavy amount because they do not use a stop loss. Ordinary traders are driven by their sentiments and not by knowledge, and due to this, they end up trusting tip sellers who claim to give them good returns. In hope of good returns and lack of knowledge, ordinary traders are the biggest losers in the market. Ordinary traders and investors do not understand the relationship among the various financial assets and the reason that drives the asset to a particular point price. They do not know about the link between the economy and the financial asset they are trading. Big players trade with a strict stop loss of 2% of the capital they are trading, so that capital can be managed even after straight consecutive losses. Capital can only be managed with a strict stop loss, which is avoided by most ordinary traders because they trade on leveraged accounts and end up blowing their whole account in one go. There is no trader in the world with 100% accuracy. One must be comfortable with losses one makes, as this is the part of the game. One must shift their focus from making money fast to making large profits and small losses. Avoiding large losses will help you to last longer in the investing game. Psychology plays an important role that differentiates a profitable trader from the trader who books losses. If your psychology related to trading is not right, then it will become hard for you to make money. You make no money on stocks bought by you if you have not booked your profits, and you make no losses on stocks if you have not booked your losses. Ordinary traders overpay to fund managers every time, even though they are making losses out of their investments. There are thousands of reasons that may affect the share price of a company. For example, economy, local or global, industry, company's fundamentals, technicals, new regulations, taxes, social and political risks, and many more. If anyone is giving you a guaranteed returns promise, then either he's not experienced or he's just lying to you. In the stock market, the best you can do is to minimize the risk by taking calculated, informed decision. When everything is doing well, good economy, high employment, government taking favorable decisions, etc., people become optimistic and somewhat greedy. After all, we all hope to make as much wealth as possible in the shortest amount of time. And this leads to the mispricing on stocks. Because of the investor's excessive desire, greed, it becomes difficult to maintain a long-term strategy and stick to the fundamentals. Hate to say it, but yes, the corporate leaders may manipulate their earnings. This is an ugly truth about stock market. Everyone wants to invest in a fast-growing company. And what can be a better sign of growth than consistently increasing earnings of a company? However, when the market starts expecting an extraordinary performance from the company quarter after quarter, it puts a lot of pressure on the corporate leaders to meet those expectations. And when they fail to do so, being afraid that their share price may fall down, sometimes they manipulate their results. There are a number of examples of companies who are found guilty of manipulating their financial statements. The best example, which you might already know, is Satyam Computers. This is the ugliest truth about the stock market. Not everyone makes money from the stock market. In fact, over 90% population loses money in stocks. This is not because the market doesn't give equal opportunity to all. This is because most people are not ready to put any time or efforts. The top-notch analysts who keep guessing the economic expansion or recession will fail to predict the same when a similar situation like 2008, where the market falls over 60%, will repeat. Advisors provide financial advice based on the available information and their experience. If you expect them to predict the future as well, you are deluded, and if they do predict the future, they are. When you are entering the stock market, be ready to see many unexpected things. No one knows the future.
Please do subscribe for more videos.